Altcoins stock-to-flow, a flawed prediction tool? The effectiveness of altcoin stock-to-flow model as a predictive tool is questioned in this video. Its accuracy in forecasting future price movements is critically examined, offering viewers a deeper understanding of its potential limitations. Is the altcoin stock-to-flow model the crystal ball you think it is, or is it leading investors astray? For years, this metric has been hailed as a reliable predictor of future prices, but our deep dive reveals a different story. Prepare to question everything you thought you knew about altcoin valuations. Bold claim debunking. Forget everything you've been told about altcoin stock-to-flow being a perfect predictor. We're here to expose why this widely celebrated model might be more of a hindrance than a help for your investment strategy. Stick around to discover the overlooked flaws that could completely change how you view altcoin valuations. Each of these topics will soon become a complete video on this channel, giving you a deeper dive into every idea. Outline: the allure and failures of stock-to-flow. Introduction to the stock-to-flow model and its initial success with Bitcoin. This section will explain what the stock-to-flow (S2F) model is, why it became popular, and how it was once considered highly accurate for Bitcoin. Explaining the core principle: scarcity drives value. Highlight the fundamental idea behind the model, that limited supply increases value over time. Why investors flock to this model for altcoins. Discuss how the early success with Bitcoin tempted investors to apply S2F to other cryptocurrencies, showing instances where the S2F chart's predictions for Bitcoin itself dramatically missed the mark. Provide clear examples of Bitcoin price deviations that show the weaknesses of the model. Why altcoins aren't Bitcoin. Fundamental differences in tokenomics and supply schedules for various altcoins. This part will outline why altcoins cannot simply follow Bitcoin's economic patterns. The impact of diverse use cases and adoption rates on altcoin valuation. Show how real-world utility and adoption levels affect altcoin prices differently. Comparing market capitalization and liquidity between Bitcoin and emerging altcoins. Highlight the scale and stability differences that make Bitcoin unique compared to smaller altcoins. Unpacking the flaws. Analyzing specific altcoins where S2F predictions failed significantly. Present examples where applying S2F to altcoins gave highly inaccurate results. Discussing external market factors, e.g., regulatory changes, macroeconomics, not accounted for by S2F. Explain how external factors ignored by S2F can drastically influence prices. The issue of planned obsolescence, or evolving narratives in altcoin projects, versus Bitcoin's consistent store of value proposition. Point out how the changing nature of altcoins contrasts with Bitcoin's stable narrative, making S2F unreliable. Alternative valuation metrics. Introducing alternative models like Metcalfe's law for network effects. Suggest models that consider user growth and network effects as better valuation tools. Exploring fundamental analysis beyond supply-side metrics, including project utility and team strength. Emphasize the importance of evaluating fundamentals, not just scarcity. Emphasizing the importance of a multifaceted approach to altcoin valuation. Encourage viewers to use multiple valuation methods for more accurate insights. Beyond the model, smarter investing, highlighting the dangers of relying on single, simplistic models for complex assets. Stress: why over-reliance on S2F or any one model can be dangerous. Actionable advice for viewers on due diligence and risk. Management in altcoin investments. Provide practical tips for researching projects and managing risks effectively. Concluding thoughts on evolving market dynamics and the need for continuous learning. Wrap up by reinforcing the need for ongoing education and adaptability in crypto investing. At the end of the day, relying on any single simplistic model for such complex assets is dangerous. Stock-to-flow can be an interesting tool, but it should never be the sole basis for investment decisions. Smarter investors focus on due diligence and risk management. That means researching projects thoroughly, diversifying investments, and staying aware of broader market conditions. Crypto is constantly evolving. Success depends on continuous learning, questioning assumptions, and being ready to adapt as the landscape changes. Closing. So the next time you hear someone claim that stock-to-flow is the ultimate predictor of altcoin prices, remember, models are just tools, not guarantees. Use them wisely, question their limits, and always keep a broader perspective. The topics I've highlighted today are only the beginning. Each will be developed into a full video right here on this channel, giving you the opportunity to explore every detail. Be sure to subscribe so you can dive even deeper with us.